Today I'm going to learn about one of the most important components of the financial system, the capital market. To help us understand this topic better, allow me to introduce myself. I'm Cindy Villaflor-Sandote, and I will guide you. We will cover the meaning, function, and structure of the capital market. So let's listen carefully and be ready to learn something new.
The capital market is a part of the financial system that helps in raising and investing money for the long term. It's where companies, governments, and individuals go for funds for years, like building factories or major projects. It deals with long-term securities, such as stocks and bonds. Stocks are shares of ownership. Bonds are loans to companies or government. Example, Jollibee sells shares to open more branches abroad, letting investors become part owners. One key function is raising capital, enabling companies and governments to obtain long-term funds for growth. For example, a government issues bonds for a new airport, using the funds immediately while paying back later. Another function is liquidity provision, allowing quick buying or selling of stocks and bonds. For instance, if you need cash, you can sell your shares quickly in the capital market. The capital market also aids price discovery, revealing true market values of stocks and bonds. If many want to buy a stock, its price rises. Selling demand lowers its value. Risk transfer is another function, allowing investors to diversify with multiple investments. For example, investing in both Jollibee and Globe reduces total risk if one loses value. Lastly, it enables efficient allocation of resources, directing funds toward high-performing sectors. For instance, a successful tech company attracts more investment, allowing growth and job creation.
Capital markets are systems that allow entities to raise long-term funds. They may seem complex, but I'll simplify it for you. Capital markets are mainly divided into two segments, the primary market and the secondary market. Let's explore each one. The primary market, also called the new issue market. New securities like stocks or bonds are issued for the first time here. In the primary market, new securities are issued. This includes initial public offerings, bond issuances, and private placements. An IPO is when a company offers its shares to the public for the first time, marking a major milestone. Bond issuance involves governments and corporations issuing bonds to raise money through debt, which investors buy. Private placements are direct sales of securities to a select group of investors instead of the general public. The secondary market is where investors trade existing securities. The company doesn't receive new money here. In the secondary market, securities are traded among investors. It includes stock exchanges and over-the-counter markets. Stock exchanges are formal platforms like the Philippine Stock Exchange. Only listed securities are traded here. OTC markets are more informal and decentralized, allowing direct trading between parties, often with brokers.
The secondary market provides liquidity, meaning investors can easily buy or sell their securities whenever they need to. It also helps in price discovery. Constant trading determines a fair market price for each security based on supply and demand. Both liquidity and price discovery are essential for the smooth functioning of the financial system. These mechanisms help channel savings into investments that drive economic growth. Thank you, and I hope you now have a clearer picture of how capital markets work.